back to my channel Rapid Revision. This is a suspense account question, and this is from October-November 2024. This is paper 2 variant 3. The question here says Natalie prepared her trial balance at the end of the year 31st March 2024. The totals did not agree and she had to open a suspense account. The debit side of the trial balance was 357 higher than the credit side. So that means the difference in trial balance will come on the credit side because the credit side is lighter. The debit side is heavier. Natalie later discovered the following errors. They have given you these 5 errors, and in the first part, they are asking you to prepare journal entries to correct the errors 1 to 5, and this is basically for 10 marks. So you need to prepare 5 journal entries for correcting 5 errors. So this is going to be quite simple. We'll read the errors first. A bank transfer 420 received from a credit customer Sarah had been correctly recorded in the bank, but no entry had been made. No other entry had been made. So bank transfer received from credit customer Sarah means that when a customer transfers money to the business, like to our business, we do bank debit and we should do Sarah credit. But we did bank debit, but we did not credit Sarah. So we'll simply write here error number 1, and we'll write here suspense debit because we don't have anything to debit, and we'll do Sarah credit. So suspense debit, Sarah credit, and the amount will be 420. So this was basically partial error of omission, right? Because so this was basically partial error of omission, right? Because we recorded one side of the entry, but we do not record the other side. The one side that we recorded was the money that we have received from Sarah in the bank. So we debited the bank account, but we did not credit Sarah. So now in the correction, you have to credit Sarah and you need to debit suspense because you don't have anything to debit. Error number 2 here. Natalie contributed a personal motor vehicle to the business valued at 7,000. This had been debited to the capital account. So you have incorrectly debited capital. You should have credited capital because whenever capital increases, you credit the capital account. So we have incorrectly debited capital account and credited to the vehicle maintenance account. So vehicle maintenance account is again a wrong account because vehicle maintenance is an expense account, and the thing we have basically transferred the motor vehicle to the business. So that means and a non-current asset has been transferred to the business. So that means motor vehicle should be debited. So you will debit the motor vehicle. So I'll write here motor vehicle debit. And I will record the motor vehicle and record 7,000 here. I need to remove it from the vehicle maintenance account. So I will debit the vehicle maintenance account. So I basically wrongly credited the vehicle maintenance account. So we recorded 7,000 on the credit side of the vehicle maintenance account. So now I'm debiting the vehicle maintenance account in order to remove it from vehicle maintenance account. And in the capital account, I need to record this at double amount, that will be 14,000, because in the capital account on the debit side I wrongly recorded 7,000, right? So which should not have been debited. Capital account must be credited if capital is increasing. The owner bringing a new motor vehicle to the business is like owner transferring the personal motor vehicle to the business. The correct entry would be motor vehicle debit, capital credit. So since we debited capital account, so once when we credit capital account, it will be removed from the capital account. And now when we have to record capital as capital, we record it on the credit side as 7,000. So that means capital should be credited by 14,000. This is error number 2. Error correction number 2. So error correction number 3. Purchases of 270 had been correctly entered in the supplier's account, but had been debited as 207 in the purchases account. So the correct entry, whenever you purchase goods on credit, you do purchases debit, supplier credit. So when we credited the supplier's account, we had written 270 in the supplier's account on the credit side. But in the purchase account on the debit side, I've written 207, which means I have understated purchases. So now I need to debit purchases in order to record the $63, which I did not record earlier. So I will debit purchases by 63. So this will now come up to 270, right? And I will credit suspense because I don't have anything to credit, so I need to credit suspense account here. Okay, error correction number 4. They are saying no entry had been made for general expenses 126 paid by bank transfer. This is error of omission. This is very clear error of omission. I will record this. So I'll do general expenses debit, 126, and I will credit bank because the payment has been made by bank transfer 126. Okay, in the last entry here, they're saying cash drawings of 200 had been debited to the cash account and credited to the drawings account. So the cash drawings double entry is actually drawings, debit, cash, credit. But what I have done here is I have done debit cash and credit drawings, which is an error of reversal. So this is an error of reversal. And to correct error of reversal, you guys will have to double the amounts and prepare the correct journal entry. So error number 5, correction of error number 5 will be drawings account will be debited and the amount will be 400, and cash account must be credited and the amount will be 400. So in error of reversal, normally whenever you reverse the entries, like whenever you reverse the sides, you need to make the correct entry and double the amount. So because in the drawings account we've written 200 on the credit side, we debit 200 once and remove it from the drawings account. Basically remove the effect of recording drawings on the wrong side, and then you also record it on the correct side, that is the debit side. So same goes for the cash account. So this was the drawings account, and same goes for the cash account. So the correct entry will be drawings, debit, cash, credit, and the amount will be 400. Okay, in the next part, they are saying prepare the suspense account at 31st March 2024. I know the difference in trial balance. So the opening difference in trial balance will be debit was heavier, 357 higher than the credit side. So on the credit side, I will write here difference in trial balance. I will start with difference in trial balance. I'll write here 357. This will be my difference in trial balance. I'll write here March 31. So this was on March 31, 2024. And then all of these corrections are also on March 31, 2024. But in my first error, I have suspense on the debit side. In the third error, I have suspense on the credit side, and in all other errors, I don't have suspense. So in the first error, suspense is debited, and Sarah is the detail. So basically, I'll write here Sarah, and I'll write here 420, and this will be debited, and this will also be March 31, 2024. And in the third entry, I am debiting purchases and crediting suspense. So I will write here purchases, and I will write here 63. Now my account will balance, of course. 357 plus 63 is 420, so I will total this to 420 on both sides. So this was quite simple. This was for 3 marks. Now they are saying complete the table by identifying the types of errors that occurred in errors 4 and 5. So I have done that already. Error number 4 was error of omission because they haven't made any entry for general expenses that they have paid by bank transfer. Error number 5 is reversal because the correct double entry for recording cash drawings is drawings account debit, cash account credit, but they did cash account debit and drawings account credit. So this is clear error of reversal. So I will write omission for error number 5 and complete reversal for complete reversal for error number 5 and omission for error number 4. Then they are saying complete the table below by placing a tick in the appropriate column to indicate the effect on the profit for the year after correcting each of the errors. So I have told this to you guys already also, that whatever comes in the income statement is going to affect your profit. So expenses go in the income statement, incomes go in the income statement, sales goes to the income statement, purchases goes to the income statement. So this Sara is a trade receivable, so this will not go to the income statement, so this is not going to affect profit. Motor vehicle does not go to the income statement. It's a statement of financial position account. But vehicle maintenance, yes, this is going to affect your income statement, that is your profit. Purchases is going to affect your profit. Yes, general expenses is going to affect your profit because general expenses goes in the expenses section of the income statement. Drawings and cash, both. Cash drawings does not affect your income statement because cash drawings does not go in the income statement, right? So error number 5 and error number 1 is not going to affect profit, so I'm going to take no effect. For error number 5, I will write error number 1, I will write no effect. For error number 5, I will write no effect. For the rest of the errors, vehicle maintenance, I'm debiting. So whenever I'm debiting an expense, I'm increasing an expense. When an expense is increasing, your profit will decrease. So for error number 2, I'll write here profit will decrease. And for error number 3, again, purchases is being debited. When purchases is debited, purchases is increasing. Cost of sales will increase because of that, and gross profit will decrease because of that. So therefore, your debit purchases will actually decrease your profit. So error number 3, profit will decrease. And then for error number 4, general expenses being debited. When general expense is being debited, that means an expense is increasing. When expense increases, profit decreases. So that means an expense is increase on the debit side. So if you're debiting an expense, that means you're increasing an expense. So when expenses increase, your profit should decrease. So yes, error number 2 and 3 and 4, all three of them will have a decrease effect on profit. So that's it for this video. I hope this helps you guys. Thank you so much for watching.